Alrighty, good morning everybody. Happy Monday. It's always my favorite day of the week here. That's obviously joking. So we are into a pretty busy week here. Just to here, I actually should have had it up here. Um, just to quickly look over the news here, let's bring it up on here. As you can see, the whole week is nothing but major news events, and then we have FOMC announcement, we have the June contract rolling over into the September contract for what do we have? Options on futures, options on stocks, futures, a whole bunch of things rolling over here, also known as quadruple witching, which will officially occur here on Friday when all the contracts will expire at the end of the day. So it's going to be, who knows what's going to happen here, but we've got a whole lot of stuff packed in here in this week. So that's one first thing I want to mention. This morning this might be the quietest morning here. We do have a Treasury statement announcement here at 11 a.m. Pacific to 2 p.m. Eastern, but today is going to be, I guess, the quiet day, and then we're going to be jumping into some big news events throughout the week, which could be market movers. You guys know CPI, huge market movers, sometimes at least. FOMC, you never know. Jobless claims, retail sales, all these type of things are going to be really important. So keep that in mind that as the week goes on here, could see some interesting stuff. And that brings us into this morning. So what do we do on Mondays? We want to go back and look at the previous weekly candle. So I'm going to jump up just to see if there's anything interesting from this candlestick perspective up here on the previous weekly candle. And as you can see, for the last couple weeks, it's been a nice bullish break to the upside, right? We saw this coming into June. This was the candlestick that we were seeing coming out of May. Very, very bullish looking. This was our first week of June here, or actually the last week of May going into June. Also very, very bullish looking. Then we had last week, which was also, it was very, very sideways. And then we got the pop at the end of the week there. You remember on Friday, that's what we expected, was for this to break out to the upside. Of course, what did they have to do? They had to break it to the upside right here and then bring it all the way back into the previous weekly range and chop around to the top end of it at the end of the week there. But for what it's worth, we did get the breakout to the upside there. And now this candle that closed from last week, to me, it's hard to really interpret that. It's not quite as strong as the previous 2 weeks candles there, or I should say the previous 3 weeks. So last week's, what can you say? It's hard to interpret that one. Just keep in mind 42.94 quarter is 50% of last week. So what I did was I went ahead and threw up that dash dot magenta line there. That is the 50% of the previous week, just as kind of like a placeholder there to see as this week develops, are we going to come back and retrace the whole previous week there and then go ahead and pull back lower, or are we going to hold up above there and maybe even hold up above 50% of yesterday or Friday of last week, which was down around that 0475. So keep that in mind. Again, the weekly's not quite giving us anything too conclusive there, but we do it every Monday morning just to see. So let's go down and take a look from the daily perspective this morning. Friday's candle, technically yesterday's candle, had a very clear bearish divergence from the high. Again, assuming that we can break down below the low of that signal candle, we will have an officially closed signal, a bearish signal from the high of last week. The caveat to that is that when you're in a bullish push, which when you zoom out and look, ever since kind of last week or two of May there, we've been in a nice bullish trend. We're going to get counter signals from the high. So when we're in a bullish trend, we will get those counter signals. And so that the way you have to interpret that when you're in a bullish trend, until we start to make lower lows and lower highs and start a bearish trend right now, we're in that bullish trend. So that might just be a clue for a pullback, right? When we're in a bullish trend, the bearish signals from the highs are giving us clues for these shallow pullbacks that we're getting. So we got it from Friday's high. We also, if we come down to our 4-hour, we didn't get a beautiful lineup there with the 4-hour showing a clean bearish signal from Friday's high. But from our overnight high here, which was just a point or two below it, we did get a bearish 4-hour signal. And this is the caveat to that. This signal here is we got a bullish signal from the lows of the overnight session on the 4-hour, and then we just got this counter signal maybe an hour or two ago. So we're stuck inside of this little channel here. If you look, the 50% of Friday and the high of Friday, right inside of here, we've got these two conflicting 4-hour signals. And then when you go to the hourly, it's kind of just a mess up here. So we don't necessarily have that beautiful holy alignment of every time frame agreeing from the high of last week. So it's kind of, again, another situation where we don't have a really clear picture, but we do have some lines in the sand that we're going to establish here over the next 10-15 minutes. So let's talk about it. Again, we've got some decent bearish signals from up on the highs here, but we're currently in a bullish trend, and the market's holding 50% of yesterday or 50% of Friday. So the fact that we're still up here, and if we come down into our shorter time frames and look, we're still holding up above the 200 moving average right now. In fact, in the overnight session, there's that hold from the 200 that we talk about so often. Not only the first test, but the second test, beautiful hold. And we're pushing to hold back up above VWAP here. So we're kind of stuck, like I said, inside of this channel here. And our conditions for this morning are going to be, if the bears can hold the market down below the high of last week, which was Friday's high, yesterday's high, if the bears can hold the market below there, and that might include a little peek through and then a pullback right back down below. If that does happen, then we're looking at, potentially a pullback, especially with the 4-hour bearish signal from the overnight high and the daily bearish signal from Friday's high. If they hold up here, then we're looking at a potential pullback into some levels that we have down below. So let's talk about the levels that we have below us here as potential supports if the market does get some type of rotation here this morning. And then we'll talk about the opposite case, about what we might want to do if the market does continue in this bullish trend that we've been in for however many days now, a couple weeks. So let's go to the hourly. This is a decent kind of overview, close enough where we can see the levels very discreetly, zoomed out enough that we can get kind of this bigger picture. So first thing I want to mention, if we zoom out and look at everything here, we've got a bunch of legs, right? We've got kind of, I guess we could start from here. So we've got this obvious rotation in the market right off our scaffolding level. It came up. We got a beautiful pullback right into around 50% of the leg. That was kind of leg one there. I mean, there were other legs, but just to start from this area, we got this second leg up to the high of last week, or at least for the beginning, the first 4 days of last week. Got this shallow pullback. This wasn't quite a 38. It bounced just a couple, about 5-6 points up in front of the 38, but interestingly enough, bounced right off our scaffolding level, nearly to the tick again. So pull back right into that. And now we're into this next leg back up. Now, if you were to actually measure these legs, they are fairly equidistant. If you go there and you go here, and a lot of people like to talk and watch these potential measured moves, right? When you get a move, a pullback, and then you get the same move up, and then a pullback, and then a lot of people will measure that and say, well, with this next leg, assuming we're in a strong bullish trend here, it should bring us up to somewhere up here, maybe up into the scaffolding around 4407, maybe right into the 61.8 retrace where we get some trouble up there. So I'm just pointing out that we've got these little legs that we're currently trading within. And this leg up here, let's see if I can bring this all the way back in now. and bring this over. This new leg, this new leg up that we're currently in, that we kind of measured and said if we were to get the same push that we got here and we got back over here, might bring us up again into the major retracement, or maybe the scaffolding at 44.08, give or take. That leg, if we measure the fib, is currently giving us a 38 down here, right around 43.01 half. Our 50% is right here around 42.94. Again, these are levels that you should be marking on your chart as I go through them right now. These are the major levels of potential support if the market does pull back here this morning. So again, we've got 43.01 half, we've got 42.94, and then we've got kind of a little confluence here between the 61.8 and our scaffolding there at around 87. So those are kind of the first few levels down below that we might find some support at. And then just in front of that 38, we've got a little pocket. It's literally just 1.4 ticks. It's the major swing here back from, I think, Thursday of last week, which, by the way, we did come back and hold here at the end of Friday beautifully. But coming back into that with the 38 there, a little 1-point pocket of potential support. A little bit further down, like I said, we've got the retracements and then this confluence between our retracements and our scaffolding. And then it's going to be back to the low of Friday there, where we came and got this really nice strong push out. So you never know what the bulls are going to do over there. They might kind of fake people out with the break and then pull it right back up into the range. You never know, right? Like I said, we don't know what the market's going to do. We can just rely on our system, our signals, our levels, and trade within those parameters. So what we have down below the low of Friday is the final kind of support area that sticks out to me until we start to break out side of this current leg that the market's, in this bullish leg that we're in. So if the market can get down through the low of Friday, and remember, you never know if they're going to do a little peek through it and then they're going to pop right back above. So that's always a possibility. But if they do bring it lower, we've got this swing high here at 42.79, and it's really kind of a major little structure zone over in this area where we had a lot of resistance. So be aware on what was that, Wednesday or Thursday of last week. And then if you just kind of look to the left, how many times has the market found amazing support from that area that then kind of became resistance back on Wednesday, that then they finally broke out from and pulled out from that area. So this is the beginning of that little box or structure zone over in that area. So be aware, again, that level is 42.79, right? So if they come down into this area, get through the low, wouldn't be surprising to see some type of trouble there before they come back into this new pocket down here below 79, down into the scaffolding. And that final scaffolding was 64.25 there, and that would be the major rotation that we got here at the low of last week. So that's what we have down below there. If the market continues to sell off through there, we've got this area that I've been watching for a really long time down here, top end of it about 42.75 down to 42.3975. Okay, and so that's that next pocket of potential support down there. And then we're down to 50% of last week, right? So if that happens, if the bulls cannot hold above 50% of last week, then we're in some trouble. So now, actually, you know something here? Let me just make sure I have this updated. So 94.25. I thought something was weird there. I was like, wait a second here. This was last week, this tight chop. Let me update that. 42.94.25. So that was way further up. So there you have it. So if the bulls pull, or the bears pull the market right below basically 50% of this leg up, which was 50% of last week, right? Is where that is. So excuse me, I forgot to update that level there. So if they get down through there, not a great sign. Getting down through the low of Friday, not a great sign. Getting down through this structure zone down here around 79, not a great sign either, right? So beyond, let's go back down to the levels we were looking at down here. Beyond that 42, say 39.5 to 42.5 area, we're then back into all of the major market scaffolding levels, and we'll have to revisit maybe some of the larger fib legs that we're in, because once this leg is over and we really do get a rotation, assuming we do, and it does come back down here, we're going to have to zoom out and look at the bigger leg that we're currently trading inside of. But until that occurs, this is what we have down below us here. Like I said, there are some pretty good bearish signals up here on these more slightly higher time frames. On the 4-hour and the daily, those are the only real signals we're seeing up off the highs. So you never know if this might be the beginning of another deeper pullback. But given the fact that the bulls have been so strong lately, this could be a nice strong rip higher. So the line in the sand this morning is going to be the weekly high, the last week's high there, Friday's high. If the bulls... actually, good thing you brought that up, Neil. So like I said, we have contract rollover this week, and that is actually a good segue. Give me one last second to talk about this, and then we're going to talk about the contract rollover for our futures contract. So if the market can get through the high of last week, the high of Friday, the high of the day before, up there, again, assuming there isn't another peak above and fail, we're looking at a push up to 43. And let's go ahead and just get the real numbers. 43, 43.75. 43.71 quarter. Remember, these are potential trouble zones for the bulls if the breakout does continue to happen. And then we have the major retracement. So we talked about that, 43.84. And then remember that measured move, if we were to get the same pop, let's go ahead and refresh this out, resume. If we have the same pop like we got here and we got here, then we're looking at a push up into basically the major 61.8 retrace at 84, or that right around 44.08 half. Above 44.08 half, it should be all the same market scaffolding levels you're aware of up above us here. So just be aware of that. And then let me go out to the weekly here and take a look. Yeah, nothing really from a structure perspective, and probably have to go down to a 4-hour to really see it. But from a structure perspective, yeah, pretty much every scaffolding level is going to highlight the major areas where we would expect rotations. They highlight all the major rotations going all the way back to maybe 2 years ago now. So we haven't been back up there, right? It's been quite a while. So let's talk about the rollover. And I should have talked about this before we started doing our analysis here. But what I like to do when the market is getting close to contract rollover, what I do is I pull up, and let me see if I can get this here. If you go onto your, let's see if I can pull this out. If you go onto your Ninja Trader dashboard, or whatever you call it, control panel, go to new, and I'm not going to click it, but go to Market Analyzer. So that's going to be how we monitor the two contracts. So you're going to hit Market Analyzer. When you do that, let's see if I can move this out of it and pull. I don't know where it is. It's going to pull up a screen like this, and these two probably are not going to be on it. You're going to have a blank screen looking like this, and you're going to want to right click and then add instruments, and you're going to go in and you're going to add in that June 2023 contract. And then in order to see the new contract, the September contract, you're going to have to go into your, let's see if I can pull the control panel up again. You're going to have to go in and pull in Tools, Database Management, and this probably, hopefully everybody who's here already knows how to do this, but you're going to go in and you're going to choose, you're going to have to update. If it's not there, you hit Future Expiries, Update, and then you're going to come up here and select them all, and or come up here and hit rollover. And then once that happens, you should be able to, when you come in here, add instruments, you should see the 9 for September there as well. So what you do is you add in the September contract and you add in the June contract, so they're both sitting next to each other here. And then you're going to right click and you're going to go to columns. And on columns here, you're going to have a bunch of things you can add there. The most important thing is daily volume. So you throw the daily volume up. So you're going to have to come up to this box, right? Hopefully you're familiar with how to use NinjaTrader here. But you'll come up, go daily volume, you'll double click it, or you'll click add. Then it's down here, and that's how you know it's going to show up in the box. Then you're going to want to compare the daily volume here. So when the current contract that we're in, which is the June contract, when the new contract, the September contract, starts to show higher daily volume than the June contract that we're currently in, that's when you want to technically roll over. That's the way I do it. That's the way a lot of people I know do it. A lot of professional traders do it. They wait for that volume to change and pivot to the new contract. And when there's more volume on that contract, they roll over. Now, here's the problem with that for today. We've got, and you can obviously see that the new contract is now trading with more volume than the June contract that we're going to be seeing expire on Friday of this week. So that would be my sign to go ahead and jump onto the September. However, because we still have all of our levels set up for this June contract, we're going to have to stick with it at least for today. And then I'll let you guys know before we start tomorrow whether or not I do roll over here at the end of the day. But I'm thinking about just rolling over because my criteria has been met. The only reason I'm not really rolling over right now is because all the levels, all our market scaffolding levels, I guess I could redraw retracements very easily and swing highs. But all of our market scaffolding is based on this June contract. So let me throw this back. So that's what, that's the problem. If we roll over to September, and actually let me pull up the market analyzer again and show you the spread here. We're currently trading at 43.15, but the June contract or the September contract is all the way up at 43.59. So we're looking at 45 points higher. So all of these market scaffolding levels are going to be shifting. I don't know if it's going to be literally 45 points higher, the current spread, because that spread will actually probably tighten a little bit by Friday. But here's the idea, and maybe I should type this out on the screen. So give me 1 second here. I don't know why I always have so much trouble visually seeing that icon. So new market scaffolding levels are coming. So as we roll over into the September contract, we're gonna not have any market scaffolding levels for a couple days. So as we kind of get onto it, as the June contract expires and we get into September contract, it'll be a couple days. Maybe we'll give it, I can't say for sure, but at least a few days into that contract, and then I'll go in and I'll redraw all the major market scaffolding levels for the new contract. So there will be possibly a week with no scaffolding, which is fine. We've got plenty of other things to rely on. But just keep in mind for those first couple days that we move to the new contract, there won't be any market scaffolding levels. And then as we have some more price action occurring and I have a chance to go back and review the historical charts, then we'll have these new scaffolding levels. So maybe there'll be a week, maybe it'll be 3-4 days, and then we should have them out for the new contract. So keep that in mind. Yeah, so thanks, Neil. I actually appreciate you mentioning this stuff. So there's another thing I'm going to point out here. The market's about to open, but what I like to do so that I have a record of what we did here on the June contract, what I like to do is go into my control panel, and I like to save the workspace. So before I roll everything over to the September, I save this workspace as the June contract, right? So I saved it before I started the broadcast. I saved it right here. As you can see, it's not even give me the so I saved that before we started, and then I rolled over like I showed you guys in the database management here, and then I saved this workspace now as my September workspace. So now if I want to go back, once we get new market scaffolding levels up and I delete all the levels off the chart, if I want to go back and review how June went, I'll go back and just go to how it was saved on NinjaTrader. So I'll have all the market scaffolding levels for that previous contract, and then I'll have all the new ones saved on this one. So if that's what I do, just so I have record of all the previous market scaffolding levels saved on the charts. Otherwise, what's going to happen is I'm going to delete all the market scaffolding levels, and then we're going to have to put new ones in. And if I go back to the June contract for whatever reason, we'll have completely skewed market scaffolding levels. So that's the only reason I do that for myself. And finally here, as the market's about to open, guys, on the shortest time frames, we've got some decent filters here, right? We've got where we are in relation to, well, the holy orange power level, where we are in relation to the VWAP and the 200 moving average. So at the moment, we're still holding above the 200, but remember that that's definitely a strong area in the chart. So if we come back into it, or if the market does come back down below, and then we come back to the back end of that 200, might have a decent low risk opportunity there. And then from the power levels themselves, remember, if we can't hold above 50% of Friday, which is our bearish daily signal from up there, if we can't hold above 50% of Friday, then that's not a good clue for the bulls. Of course, you never know. They might come down into this pocket and hold, but that's kind of a decent line in the sand there. So be aware of that. And I think that covers everything here on the shortest time frames. Hopel has basically been working here all morning, and the 200's been holding all morning. So we're stuck inside of a tight pocket. And like I said, until we get up through the high of Friday or the high of last week, it is somewhat of a bearish case, right? So that's how we started things out. We talked about the daily bearish signal up here. We talked about the 4-hour bearish signal from the overnight highs, or from the overnight highs over here. Remember, go the 4-hour. Talked about the 4-hour bearish signal up off the overnight high. So not being able to get through the overnight high, which is right there, and the high of last week, is going to be a clue for the deeper pullback. And the first line in the sand after we get through the 200 is going to be 50% of Friday, and then this pocket here from 0.1/2 to 0.2/2. So that's where we are for this morning, and I'll let you guys get to it here. Make sure this is all set up. There is one bug in the system that I don't know if some of you have noticed, but there's a bug with the way NinjaTrader plots all these levels. So any of these universal lines that we have on the chart, the major retracement levels, the major swing highs, even the shaded areas, the shaded regions that we can see up here on our 30-minute, and we can see over here on my 3, for whatever reason, sometimes the 512 doesn't continue to plot it. So I don't know what it is. I've asked NinjaTrader to help me, and they tell me I just need to update NinjaTrader, and then I update NinjaTrader and it does the same thing. So sometimes You're going to have to be aware of this. Sometimes we have our major levels that we have marked on the time charts, and the tick chart just stops plotting it. So I don't know what happens. I don't know. I don't press any buttons or anything. It just seems to happen randomly. It'll just stop plotting these, say this pocket here. So at some point you won't see it to the right hand side of the chart anymore. And I don't know how to fix that. Like I said, NinjaTrader hasn't been able to remedy it. So it just is what it is. Sometimes you might be watching the 512 and you're looking for some type of trade, and you totally miss out on a level if you're not looking to your 3 or to your 30. There could be like a level coming right across here that's on every chart, but the 512 for whatever reason just stopped plotting it. So just be aware when you're trading, you're watching maybe the 512, make sure you glance over to the 3-minute and maybe to the 30-minute just to see, are we actually at a good level here, and for whatever reason the 512 tick chart didn't plot it. And for now, knock on wood, for now it's there. But it could be that as the morning goes here, we pull back, maybe it comes right into this pocket, and for whatever reason it's no longer there on the 512. So don't know what to tell you. It's just nature of the beast. So get if it really bothers you, start hounding NinjaTrader. I've already tried myself. So good luck out there, guys. Trying to think if there's anything else to leave with you this morning. But I think that's it. So I will see you guys tomorrow morning. Happy trading. Stay nimble. Remember, our levels don't require a lot of risk. Okay? See you tomorrow. Bye-bye.